Good morning, and as I mentioned in the last video, in October I would like to talk about the budgeting and how the small businesses need to do budgeting and why is budgeting important. Today I want to talk about what are the 5 rules of budgeting, and there could be a million of rules that you can put for yourself, depending on your business, depending on where you at. There's a lot of things you can do, but in my opinion, these 5 rules are kind of an important ones and can be applied to any business. So I wanted to give you these 5 basic rules that everybody should follow. Rule number 1, make it realistic. No matter who you are, what position you're in, what stage of business you're in, you should always make sure that the budget is realistic. You should never predict that you can grow 500% unless you actually have a path to that. So unrealistic budgets are not just unhelpful, they're actually going to hurt your business, because if people feel like they cannot reach the goals, they won't even try. And so you have to make sure that the goals you set and the budget you set is very realistic and something that you can achieve. 2, make sure that when you're looking at the expenses or revenue, don't just look at the total amount. So don't just say, hey, you know what, I'm going to grow my revenue by 10%. Actually look at the drivers. What drives the business. So for example, if you have one product and you sold 1,000 units this month or this year, in order for you to grow by 10% next year, you would need to sell 1,100 units. Well, is that realistic? Is that something that can be done? So that's the way how you should look at it. Don't just look at the dollar amount, but look actually at the driver, how to get to that. Same goes for expenses. For example, if you're projecting travel expense, don't just say, you know what, I spent 100,000 this year, I'm going to spend 100,000 next year. Well, if you're planning to take more trips, that 100,000 no longer is a valid number. So you always have to look at the drivers behind the number in order for you to be able to budget correctly. Number 3, when you project revenue, think of the expenses that go with that revenue. So for example, if you are selling widgets, there's a cost of goods sold. So for every widget you're going to sell, there's a cost of goods sold that's part of it. But don't just look at that. You also have to think about it, well, what about the salesperson that sells it? Am I paying them on commission? Well, there's another expense that I need to increase because now I'm going to have higher revenue, which means I have higher expenses. So you always have to make sure that you match the two up and think about it more than just revenue, cost of goods sold. Think about what other expenses are going to have to increase in order for you to achieve that revenue target. For example, one of the things that actually just came to my mind is marketing. You know, do you need to increase marketing in order for you to increase your revenue for the next year? Number 4, make sure you distinguish between the fixed expenses and variable expenses. And the reason I say that is fixed expenses, something like rent, for example, it's not realistic to think that you can actually reduce it. Your rent is preset, and you might actually increase the rent, but there's nothing really you can do to change that unless your lease is coming up to the end and you might consider moving. But outside of that, you really are set in that regard. So when you're doing a budget, those expenses should be flat year over year or increase year over year depending on what your contract says. But then there's variable expenses that you can think about it, marketing being one of them. You know, you have a control of how much marketing dollars you're going to spend next year. You can say that I'm going to increase it because I'm going to want to drive more revenue, or you can say, you know what, I want to decrease it because it's going to be a tough year and I want to be able to control it. So think about it. Those are 2 separate things and you need to think about it differently. So like I said, separate your fixed and your variable expenses when you're doing budget and budget accordingly. And then lastly, it's something that no finance person wants to hear, but make sure you have a slush fund. And when I say slush fund is make sure you put in other expenses that are other expense line that will be there for in terms of emergency. You never know what's going to happen. There's always something that pops up that you want to make sure that you covered, and you want to be able to make sure that you have available expenses as well as cash to cover those unexpected events. And so put in that other line. Once again, don't make it too big because you don't want to dump everything into that other line because then you can't control the cost. But make sure it's once again reasonable and make sure you're thinking about that and you understand that, hey, I can cover it and I still will be successful. So those are my 5 rules. Like I said, there's could be a lot of other rules that you can add to it. And if you're doing your budget, think about what are the things that you need for your specific business, or contact a financial professional and they can actually help you build it together. Thanks.